Good afternoon, ladies with gentle hands. I just got done taking this trade in the pre-market, 650 through 710 macro. For me, it's at around 8:30 p.m., so I'm usually always able to catch it, at least for now. So my idea behind this trade is see on the 15-minute chart on the right hand side of the screen those relative equal lows inside of the Friday's first presented fair value gap, coupled with a new day opening gap low. So and then you gotta wait for the right times of the day, so 650 through 710. It creates that sell side imbalance, buy side efficiency, while at the same time taking out one of the swing lows, one of the previous swing lows there on the 1 minute on the left hand side. So you see okay, so I'm in two contracts now. My average price was pretty poor. It's like a couple ticks off of the actual sell side imbalance, buy side inefficiency. So pretty poor entry. Pretty sound risk management though, just right on top of that swing low. That's a logical place to keep it. A little bit wide. I find it more comfortable keeping it at the swing highs, because a lot of times they'll stop hunt just within the fair value gap, or like just right outside the fair value gap, but it won't actually get as high as the swing high. So here I could have got a really good price if I entered again, but once you're experiencing drawdown on two contracts, I don't think it's a smart idea to add on. I guess I wasn't really feeling too comfortable in this trade, to be honest. I didn't like how high it was getting in comparison to my price, but without any contracts, price is doing exactly what it should be doing. The bodies are staying within the lower half of the sell side imbalance, buy side efficiency, which signals it's signal strength. So you see like the bodies are, they're telling the narrative. They're saying, yeah, we'll wick, the wicks will be wicking, but the bodies will ultimately tell the story of what price is going to do. But even so, price kind of came down a lot already, so I was almost kind of expecting a retracement. And honestly, I had a poor entry, so I didn't like where I was in the trade. Overall, I did like my trade idea. I thought the trade idea was really solid throughout the whole time, but I wasn't super comfortable. So I take a contract off, one of the contracts off, or a little bit negative. I'm like a little negative, just because I wanted to reduce risk. This was kind of like the first trade of the day, and I didn't want to put a lot on the line, I guess. But overall price, looking at it in hindsight, I just took this trade like 3 minutes ago, but looking at the trade hindsight, price is doing exactly what I've been taught that it should do. So yep, there's my target down there, my original target. The top of Friday's, I believe it's Friday's first presented fair value gap, as well as it's the top of Friday's first presented fair value gap, but it's also right in the range of those relative equal lows. So there's a lot of things that are drawn that I think price is going to draw to. That's why my take profit is there. The more I do this, the more I realize how rigged it is, because it's clearly algorithmic, but it kind of sucks, because since it's rigged, someone's controlling it, and someone can manipulate it, and that's it's not the best feeling. But here, look how all the bodies are respecting the consequent encroachment of that fair value gap, which is pretty good. Now that would have been a much better entry. So you can tell I wasn't really comfortable. Then I moved my target up, because you never want to be too exact with trading, you know, like there's no reason to be super exact. And there you get like a lot of rejection, which is pretty good. But I guess the only reason why I felt uneasy in the trade is because of how much we came down already. As you can see on the 15-minute chart, it dropped like I think maybe 100 or a couple hundred points already. So I guess that's the only thing that made me feel uneasy about the trade. But other than that, it was panning out very well. But yeah, this is I think the first. I think I tried a long, but then I realized that it was clearly going to go down. So this is like my first or second trade. Probably the only trade I'll do today. I'll just watch the rest of the morning. See, I'll take a little partial. Just click the button. So I lost like $50 there. And so it's kind of just, then I reduce my risk here because I don't really like how long it's taking. I think it's taking almost like 8 to 9 minutes now to make a real big move, which for me that just builds up like anxiety, kind of like I don't like that. See how it's wicking, and then also what made me do that is the fact that it was wicking the top of the new day opening gap high, which in the right setting that could be a setup for price to launch up. But right now I shouldn't have been worried about it because price already took out buy side and then took out minor buy side before forming that sell side imbalance buy side inefficiency. So it's just, I don't like it when it's in between these like levels here. It's just weird because it can kind of just go one way or the other. Don't wanna feel your body, just want romance. Oh, and then since I only have one contract on, and my rule is once it hits 75% of my mark, I'll take a partial. So I do end up getting out on the 75 mark, and I'm gonna start doing that whenever I just have one trade, one contract on the line. I'm just gonna put my limit order on the 75 mark, and I do that now, but I do it pretty late. And then at the back end of the video is just watching how price reacts to the levels and how it doesn't take out those relative equal lows, but it does hit the first presented fair value gap and the new day opening gap low. You'll see here shortly. But yeah, timing is like pretty much everything. If you can time the markets right and wait for the right setups to come in at the right times, I mean, it does what it's supposed to do, at least during the pre-market. But in the market, it's a lot more volatile. It's like when the opening bell comes up, it's a lot more volatile. For when that happens, you gotta wait like a little bit longer for sure. Yeah, just doing his thing here. And then see how it wicks the top. Like now the last wick hit the bottom of the new day opening gap high. So that could be a good catalyst to send price down. So the reason why it's only like, I think it's only like $700 is because it's pre-market. So I think every tick goes from $20 to like $10 because it's pre-market. But once the opening bell comes, the margins get higher. So for every $1, it's $20. Like every time it moves $1, it's $20. But here I think it's just 10. or maybe even 5. I'm not sure. No, it's probably 10. But yeah, you can see how price is gravitating towards those levels that I was talking about. I mean, this isn't random. It's not like it's just going there randomly. Clearly, price is going to go to inefficiencies and liquidity, which they're both here now. And there is inefficiencies and liquidity above price right now, but this is where it's closest to. So here I move my limit order, and I'm not trying to do anything crazy, just trying to stick to my rules for sure. Sticking to your rules will make you money, not trying to be right. Trying to be right, I think, will probably make you lose a lot of money, because I mean, the market's always going to be against you, you know, and you can't be too precise, you can't be too picky with this. But no, I'm glad I reduced my risk. I got in, reduced my risk, and got out with a profit. And the real takeaway here is like the fact that I saw price deliver algorithmically, reinforcing the things that I'm learning. That's what matters to me mostly, because I got all the time in the world. I'm in no rush to make like money here. So that was the 75 mark where I got out, and that's how it reacts off the top of that inefficiency I outlined, which was my original target. But see, the fact that I took a contract off in the beginning shows me that I need more reps to build more confidence. But I mean, like I said, I'm in no rush. The fact that it feels like I'm looking at price through like an X-ray vision. Like, I mean, I'm kind of just predicting the future now, which is a pretty cool feeling to have. But no matter what, I want to stick to my rules. Make sure on top of getting the experience and getting in here. So that's where I'm kind of highlighting where I got in. See that sell sign of balance, buy sign of efficiency. It's a perfect entry. It gives you multiple times to get in, and then kind of falls right to my target, which isn't a huge run. But if you had, let's say, 1, 2, 3 contracts on, if you had more leverage, that's like a $3,000 move. If you had like 3 contracts. Then see like that red line right there, that's like best case scenario. Price goes and takes those relative equal lows out, but it doesn't have to. That's just a draw. There's also other things that price can use as a catalyst to draw towards, or sorry, there's other things there that price can use as a draw, like the Friday's first presented fair value gap. It's not just any fair value gap, it's Friday's first presented fair value gap. That's why it's unique and important. And also it's the new day opening gap low resting just right above that, so you can see why and when and where and how price went there. It wasn't random, wasn't a guess. It was just, I saw it, I entered, and I executed, kind of just like a G, you know. But yeah, it's getting pretty fun. It's like when you play sports and you first start off and you kind of suck. You're kind of just bad. And then you kind of like just, you know, practice, you know, a year, 2 years. Then you start seeing some more results. But yeah, I'm just getting started now. I haven't even been paper trading for a year. I've been paper trading since the beginning of the year. So creeping up on, yeah, just about 4 months now, which is nothing. My teacher's been trading for 33 years and he still loses. But definitely building a solid foundation here. I'm more concerned about making sure. So here price goes down enough and it doesn't quite take those relative equal lows out, but you shouldn't demand that from price. Here I would expect price to go up a little bit. Well, I know it does that because I just traded it, but it would make sense for smart money to go back up into an inefficiency put in more orders and then have it come down and take out those relative equal lows where a lot of sell stops are resting, or sorry, buy stops are resting. But yeah, every day just getting better and better. Hallelujah. Hallelujah. But yeah, that's it for today, boys. Just a little bit of price, a little bit of this, a little bit of that, you know, nothing crazy, not some light. Probably make another one tomorrow. That'll be my last one for a while. See you guys later. Peace.